Hello, everybody, and thank you for joining us here today. We're going to be hearing from TEK-Ocean Group Limited. We'll be hearing from the Managing Director and CEO, Mr. Alex Biro, and the CFO, Rod Hislop, who will be walking us through the recent financial results, and we'll get a bit of an update on current operations with the TEK-Ocean Group. I'll hand it over to you, Rod.
Thank you, Peter, and a warm welcome to all our shareholders and investors watching this webinar today, where I'd like to first address the financial results we released recently for the half year ending 31 December 2021, and add some color and explanations to these numbers. Just in general, TEK-Ocean has had a very positive year since listing, and we see ourselves as being on a solid footing as we move forward, noting that the TEK-Ocean Spirit is back in service and it's currently out on Bass Strait working on the Marinus Link project. So things are looking good for the vessel and for the company. Moving into the results from the half year, our revenue is about 13% versus the corresponding period in FY20. Revenue of around 12 million versus around 10.5 million in the corresponding year last year. The half year ending 31 December 2021 is really a tale of two quarters. The first quarter was somewhat anomalous, where we had the vessel completing its 5-yearly dry dock and is subject to a large amount of vessel upgrades and capability enhancements. Whereas Q2 was more back to normal, if you will, approach for the company. So Q1 revenues were rather light in the 4.4 odd million range, whereas Q2 revenues, when we were back in service, the vessel's working, and there was additional logistical shore-based activity, saw a 70% uptick in revenue to 7.4 million. So obviously, like I say, the dry docking and the IPO efforts that were happening in Q1 were anomalous and did not occur again in Q2. The Spirit was back in service, and we were seeing a bit more activity in the shore-based operations. So our logistics business unit and our marine business unit started to really pick up the revenue stream and the activity in Q2 versus what we saw in Q1. Obviously, there were significant IPO-related costs in Q1, and administrative costs were also higher in Q1 as we were doing all this sort of corporate work and corporate activity, versus Q2, where we were back in service and a lot of our team effort was focused on directing revenue generating activities. And as a result of this, when we extrapolate this out, our FY22 revenue forecasts are expected to exceed both FY20 and FY21. So pre-COVID, we are back sort of in service, if you will, and getting the vessel working. We're seeing a lot of activity in the tender space, and we're positioning the vessel to work. Like I say, it's currently working right now in Bass Strait on the Marinus Link project, a big project for us and the country. Continuing the theme of there being two distinct quarters, gross profit is also significantly higher in Q2 versus Q1. So in Q1, we had gross profit of around 1 million, and Q2 is around 1.8 million, so substantially higher, 80-something% higher. And EBITDA in Q1 was actually a negative number, minus 0.7 million, but Q2 saw a rebound of this, and we're starting to see, obviously, the revenue streams increasing and an EBITDA generated of roughly 800,000. So they effectively net each other off, and we end up with a small EBITDA at the end of the half of around $100,000. This is somewhat a little bit ahead of expectations, given that the vessel was off hire for most of the first half of the year, or pardon me, the half year. It didn't come back into service until late November. So really, when you look at that amount of work that we performed and revenue generated in Q2, it's quite substantial, reflecting again the logistics business uplift and the vessel back in service. So we're very happy with the way it's come back in hard into the operations. We generated a pre-tax loss for the period of $1.4 million in Q1 versus a Q2 profit pre-tax of $200,000. So again, our overall result for the half year might be poor in the sense that it's minus 1.2 odd pre-tax. It does again reflect this notion of two distinct quarters during the half year so far. Again, Q1, somewhat anomalous. The vessel dry docking, the IPO, Q2, back in action. On a cash basis, the cash reflects our current position of having drawn against our overdraft facilities. As you would expect, when you have an uptick in activity, it draws on working capital. And our working capital overdraft has been drawn against, and we note that in our financial report. And that's a common phenomenon when you have an uptick in activity and the way that the cycle of billings and revenues and costs incurred happen. It's a cash timing issue. We have a high priority in the company of working with our bankers to better structure our existing funding facilities. That's a key to me as a CFO and the business in general. Our net assets improved substantially as of 31 December, largely as a result of raising about 6.6 million of capital in the IPO, and we thank our shareholders very much for that. That's pre-issue costs, post-issue costs. We invested in the order of cash outlay over $5 million in the TEK-Ocean Spirit dry docking and capacity enhancements. So we've really established and you can see it in the back, we've established a 60-ton AHC crane behind me, and it's really enhanced the capabilities of the vessel, and we're really happy where it is. We were also able to work, constructively with a bank to manage our working capital facilities during that time, and we believe we're in a pretty good position. And like I say, we are working closely with them to even better structure our working capital and overall funding facilities for the business. What we've seen, and like I said earlier, we're starting to see an uptick again in both revenue, EBITDA, net profits from one quarter to the next, and we project that out to the end of the financial year, and we are predicting that we will have higher revenues than we did in FY20 and FY21, and we will also see an increasing EBITDA position. Now, again, given that we are 31 December results, we have a very sort of marginal EBITDA. Our projections to the end of the year, and if we extrapolated that out, we start getting back up, Peter, towards pre-COVID levels, where we were doing some substantial work and generating EBITDAs in the order of 4 or 5 million at the time. And of course, we won't necessarily hit that target this year, but we are back on that upward trajectory. So I hope that's sort of giving you a little bit of color with respect to where we are with the financials. Thank you.
Very good coverage there, Rod. Thank you very much. That should explain where we're going, and understandably the 2-quarter story makes a lot of sense given the dry dock and the IPO situation. So looking forward to a bright future, and which is a good segue into Alex to give us a bit of an update on current operations and how you see things going forward. And also a welcome to you to the role.
Thanks, Peter. And thanks, Rod, for the update on the financials. Firstly, I also would like to welcome all the shareholders and potential investors to this webinar, and I hope that Rod's report makes it clear that the company is in great shape and has had a positive start to its listed life on the ASX, despite that anomalous quarter that we spoke about earlier. And we do see it as anomalous because the company's history shows that we are in a growth pattern, and we can wish to continue that ahead of us. I'd like to now give a bit of an operational update and a bit of a look ahead on what's in the pipeline for TEK-Ocean. So what we've currently got going is in parallel is the vessel's obviously back since mid-November, straight into work after the upgrade, etc. And we already carried out some work in the Bass Strait, and then since then we've also been engaged with the Marinus Link project, which is currently labelled as the Battery of the Nation project, and that's going well offshore at the moment. And then we've got geophysical and geotechnical surveys coming up beyond in March. And then other than that, we've got the offshore reef installation in April. And then we've got some other work in the pipeline at the moment as well that we are pursuing. And there's also an uplift in engineering and consulting with key clients. The Geelong supply base is another one that we've continued to work. So we're working the supply base at Corio Bay, as well as working beaches, energies, AWH facilities outside of Geelong there. So that's a little bit of a flavour in where we're heading. Just wanted to give a bit of background regarding the crane installation. So we did the vessel upgrade back in September in Singapore, and we also did our 5-year survey of the vessel, which now means that we don't need to do one of those class surveys for another 5 years. So we've got a clean run ahead of us, but we don't need to take the vessel out of operation for anything that's planned at this stage. So that's where we're heading with the company, and it's looking very bright. And just Peter, you mentioned earlier about my new role. Yeah, I started this role in about 6 weeks ago, so straight into it. But I have been at board level, and I've seen this company grow, and I'm very excited to lead the company up. We've got a great team. We've got amazing opportunities going forward that we're working at the moment, and it's just sort of going to mushroom up the way I see it. So yeah, I'm very pleased and honoured to take this role for the company, and which is poised for a period of substantial growth, and it's shaping up to be both exciting and positive experience for us. So
thanks, Alex. Yeah. No, thanks for that coverage of that, your role. I know, having spoken to you, that you're quite excited about your involvement going forward with the company. But I'm just going to start with a couple of questions here for Rod. Rod, the Q2 revenues of 7.5 million was a pretty good increase over Q1. 170% increase, in fact. How's the next quarter looking for you? You've probably covered some of these questions, but we might review them.
Yeah, look, we're looking pretty good for the next couple of quarters. You know, like I said, the Marinus Link project is currently underway. The vessel behind me is offshore in Bass Strait, operating out of Tasmania. And it's going to be working through this month and maybe a little bit into the following month. And we've got that following up with some additional geotechnical work offshore with another client right after that. So that's, you know, positioning the vessel well for its contractual obligations over the next few months. And also what we're noticing, and Alex might expand on it later, is a noticeable uplift in the volume of tenders that we're receiving and responding to. So there seems to be, again, an uplift in activity in the markets that we operate in. So we're actually quite positive about the outlook for the company and securing additional work for both the vessel and our logistics business and consultancy and engineering businesses. So yeah, we're pretty positive about that. Thank you.
You've covered a couple of questions I had there, but I'll move on to this one. Could you talk a little bit about the margins in marine services and how the contracts typically work in this industry?
Yeah, look, Peter, I won't specifically comment on marine business individually in terms of margins. Generally speaking, across our sort of blended industry and business units, we're doing about 25% gross margin on that. Typically, how any project works is we bill our clients on a monthly basis. So we incur a variety of costs on behalf of any client. You know, you look behind me and we've got bunker fuel to power the vessel. We've got onboard personnel that we need to pay, and victuals to cover. So typically you would incur those costs through the course of the month, pay them, and then you would gather those invoices up, the costs up, and roll that into an invoice to your clients, who typically pay you on about 30-day terms, depending again on the particular client and the nature of the contract that you have with them. That's pretty typical.
Okay, and I think as I was explained on a trip out to the boat, the contracts are usually a daily basis, and much of those costs, such as fuel, etc., are absorbed by the client in those contracts.
Yeah, typically. So generally speaking, say we need to send the vessel out for a 1 month long period. We might need to put a substantial amount of bunker fuel into it, basically like filling up your car. And then you burn that through the period of the contract, and you invoice that as you go. So that's an example of where working capital gets consumed You know, when you fill your car up, you pay right there at the petrol station before you drive away. Same thing when you're filling up a vessel. You pay your well, you might have short terms with it, but you pay your bunker fuels before you effectively leave. So there is a lot of costs that go into building up and performing the work before you're able to generate the revenue invoice and issue it to your client, who then, like I say, has 30-day terms typically on top of that. Yeah, so it does have a working capital. So when we comment back on the cash position we were talking about earlier, typically when you see an uptick in effort and activity, as we did in the logistics business and the marine business in the last quarter, or Q2, that actually consumes a lot of working capital. You have to fund that before you can generate your revenue invoices and submit that to the client. So that's largely impacting the cash position for the year. But funnily enough, that's a positive thing. That means we're out there working, spending the money to eventually earn the money and receive the money in cash from our clients.
And working for the clients, that takes me on to a question here for Alex. Can you tell us a bit more about the new crane that you fitted recently in Singapore, and how you see this benefiting the operational outlook for the TEK-Ocean Spirit? And on that, are you happy with the workload that's growing from new contracts and the ability of the ship to meet those?
Absolutely, Peter. It's look, I can truly say historically we had no crane on board. We had a certain level of business, but since coming back, the work we've picked up is really focused on around the crane. And so this is really going with our original strategy in building up a capability in a fairly remote area that we are in at the moment, to give it that Swiss Army knife approach to things where we've got the crane, we've got the A-frame, we've got various other services on board that we're able to offer our clients. But the crane's been the big one. It's an active heave crane, which basically means it compensates with the sea states that you're working. So if you're working on the seabed, the piece of equipment that is down there, which is critical most of the time for the operations and they're very sensitive, is actually almost like it has no motion. So our crane is compensating for those elements. So it's been a great addition to our capability, and everything we're looking at really going forward now, we can say, well, we can give you this if this is what you want. We can give you that, and all these elements, like I say, make the vessel so much more usable and flexible for what we've got coming up. So we said we talked about this a year ago, and look where we are today. We made it happen. And I wanted to thank the support from the shareholders for helping us with that, and also a great team that's been able to pull this all together in such a short space of time. When you really look at the timeline, a lot of companies would really struggle to make that happen in such a short time. So that's where we're at, and it's certainly going to take us forward. We're finding now, Peter, that there are some mega projects coming up that we're the boots on the ground. So the customers are actually asking for our approval and to offer our services to other people coming in to say these guys are actually local here. They've got the boots on the ground. They're established. They've got management systems in place, and they've got this really wide, broad service they're offering. So I think that's a really plus for the company, and we're not seeing the potential yet in terms of achieving it, but it's in the pipeline.
That's a really good point, Alex. During gold booms, you want to be selling the shovels to the gold miners, and that's where the money is. And similarly, there's been a lot of newspaper articles written recently about the Star of the South and all the massive impact of that. The oil well seabed remediation, rehabilitation, I've seen a bit of that in the press recently. Your vessel now is uniquely positioned to play a major part in those potential ongoing businesses.
That's correct, Peter. Yes. Yep.
So which leads me on to probably the last one to finish up with you, Alex. I think it's great that you've come on board. You've had a long association. I know that you're very enthusiastic. What is it that really excites you about the future for TEK-Ocean and where you think you can take it? What's your vision here?
Well, It's a great question, and I want to tell the shareholders and everyone this, that really my aim at the moment is to basically aim to increase the revenue for the company by 2 to 3 times in the next couple of years. That's the aim, and I've got a strategy to basically in place for the company to grow. And to do that, we're actually going to expand our transitional energy sector services. So that's companies like SOT. So this is Star of the South, the Marinus Link. These are all outside our normal sort of operations that we used to carry out. So these are the ones we're actually venturing into heavily. So I see that being number one. Number two, grow our decom rehabilitation services business, and that's organically, as well as establishing some really good strategic partnerships. And again, it comes down to the boots on the ground. We're getting a lot of approaches from big international players to help them here. And we've actually, during COVID as well, we managed to really help some other companies along the way, because we were local, and we've proven ourselves to be a worthy contractor in place, or a partner, should I say, in place here in Victoria, etc. Number three would be that we want our normal legacy business that we've had, which is torque turn, subsea completions, asset integrity, workshop services, logistics, supply base, consultancy. I mean, I can name a whole bunch of them. Project management, all these things we want to now grow and actually work off. So these all feed into the other new areas that we're looking at. And we're very excited about the company being in that position to be able to do so. I think the systems we put in place, the people, the whole structure, you got to tweak it every now and then. It's the growth that we need to focus on and work out exactly how to manage that. So I'm very thrilled. I think we've got a great future ahead.
You're pumped, Alex. I can tell that. So, and I think that's what we wanted to hear. That's wonderful. So thank you, Alex, and thank you, Rod, for that update today. I'm sure all shareholders and investors will appreciate your time, and we look forward to hearing on some of those good new pieces of news as we move forward. So thank you very much.